Welcome to the Trading Lounge and the FX. The Feds from the meeting are going to cut the bond buying starting in October. So we've seen a little spike in the markets, but nothing too dramatic. So with the US dollar here, I'm just going to sort of ignore this spike to this point here because there's such a nice wave count in terms of 5 waves moving up to this point here, with this being the third of the third in through to here, and the 61.8 retracement level comes nicely back in at the 80 here. So let's just allow that to play out. The 80 as resistance though would give a bearish bias to this particular market. Once again, for a trend that's going to be moving to the upside, we want to see the 80-30 as a retested support. That would separate the market from the 80 in terms of psychology, or rather orders, to be frank about it. So that's pretty much what we're looking for. And you know, if we'd found support on the 80-30 while the market had been up through here, then we would have been looking to short the euro and the Australian dollar, but that wasn't the case. We didn't get this trigger here, but we still could. So we just need to allow it to play out and have a look at the euro and the AU, and have a look at the options on those markets there as well. Starting with the euro here, the 61.8 retracement level comes back in around the midpoint here, the 136.50 area through here. So we could say that a little bit like the US dollar, if the US dollar index found the 80 as resistance, then it would move down from that point, and the same here at the midpoint here, so the 136.50. If support was gleaned on that, and a tested support as well on the 50, on the 136.50, then we would look to the upside. But while it's under the 150, the 61.8 retracement level, we need to give it time to mature and try and get some understanding of what's occurring at that particular level there. Now, if it fails from the 61.8 level here, where the supply is as well, then we could probably look to short it if the 136.20 became the retested resistance at that point there. So the 136.20 for the short, and only in part as well, because you'd need to add to that short at 136 as a retested resistance, which is obviously down here. And on the long side too, if the 136.50 became the support, then you can look to add on top of this particular market, on top of the group 2 here, the 136.72. The other point that I want to point out here too, let's just assume for a moment that that we do have a positive market here. We have 1 and 2 and 3 and 4 and 5 up through here. Then if that's the case, then we'd be looking for an A and a B and a C wave coming back into this area through here. And then we'd be looking for a move to the upside from that point. So we would look at, if that was going to be the case, then and the pattern, then look for support on top of group 1, the 136.30 at that point there. Okay. Otherwise, this will move down through to here and fail to find support up on this level here, and move down from that area here. So it's just something to another pattern to watch out for. The Australian market, we've been looking at 2 counts, and I wanted to start with the alternative count here on the 4-hour chart. Not that the 4 hours matters, it could be daily, it could be 2 hours, it doesn't matter, but it's the pattern that interests me, because yesterday we were looking at this alternative count as being a wave 3 here, and then an A and a B and a C wave here for wave 4. And if that's the case, then it appears that we've got wave 1 up through here as an impulse wave in 5 waves, and therefore we'll look for some sort of correction back here for wave 2, and then wave 3 to the upside. So if you see the market move back below the 94, but staying above group 2 here, because our short trade from here, from yesterday, was going to be at 93.72 as resistance, and that never came about. So we're not short, we're not in the market at this stage. So the market is working itself into a corner, and we need to be diligent and stay with that. So on the positive side, we can view this as 5 waves up through here, a little bit like the euro, and then an ABC back through here, finding support at group 2 here, and then moving up. So the long trade would be back on 94 after this, some type of pattern like this here, back over here on 94, and we can trade along from that point there. On the short side, we can still look at 93.72, and the short side of the market is calling this a top in through here at this high here, and working lower from here. So we'd be looking at this not as a C wave down here, but as wave 1 back for wave 2 to the 61.8 retracement level, and then down through here, and this is just as valid as well. But we want to be under the 94 to short this here and not on top of it. So drilling into here, as yesterday as well, we wanted the 93.72 as a retested resistance. That never came about, so we've been on the right side so far, and it does appear to be a reasonably nice looking 5 waves up here, but it can be counted as corrective as well, and we'll look at that in a moment. But the 60 60% retracement level of this move down through here is back up around the 94, 35, 36 area through here. So what we could say here too is that if we found support on top of 94.30, and I mean a retested support on top of group 1, 94.30, then we would see the market move up from that point there. So that's something to look at. Otherwise, we would see this market have a corrective pattern from this current highs here, some sort of retest back in here, and this is the 50-60% retracement level from this high up through here. So we can expect it to come back here, but as a retested resistance on the 93.72, that will give you the bearish bias from that point there. So once again, we just really need to allow this to play out, and after a correction in here, looking for support on 94 would be the trigger to the upside. I've tried to pull this apart here to find a very sort of dominant, clean sort of count in terms of being impulse or corrective, but there's 2 fits here. They can be counted as corrective or impulsive. So I don't think that we can really sort of rely on this situation. So we really do need to allow this market to play out a little bit further before we make a decision to be long or short in this market. So let's just see what happens at this current high here, and watch this space here, as they'd say. The Euro Australian is pretty much on track. We'd been talking about this market having we've been working through a wave 4 here, and we've lifted it up 1 degree to the green structure here. And we can see that there's overlapping wave structures through here, so we're pretty confident that it's corrective. And we do have this move down through here that can count as an impulse wave, and then we're looking for a 61.8 retracement level coming back up here. But we understand at just above the 145 here, there's a big block of price action here, which would be supply order sitting there, and we can see that coming into play now, because this move up through here has really been hit. The bids have been hit here, so there is resistance here. So essentially we're looking for a short, and we could do that at 144.72 as a retested resistance, or that low there being taken out. So if we just drill in here for a moment, we can see the 144.72 as the support here. So if we got a break below that, you could short that. The current move down through here so far appears to be in 3 waves, not 5 waves, so it's bullish corrective. So it can move up here higher, and we could just get a larger wave 2 here, and we would need to look at this then in a larger pattern, as such as a wave A to here, wave B over to here, and a wave C over to here, with this over here as such like this. So it could get a bit bigger and uglier. So that's why it's important to sell new lows rather than try and get a short position in here. So a break of this trend line should do the trick on the short side. Otherwise, we need to allow it to play out to the upside here. The yen crosses, the pound yen, still on track here. We're looking at 5 waves up through here on the daily at the 175 we exited, and we can see 5 waves down here now, and we're looking at the retracement moving back. So the move down through here, we were looking at this being in 5 waves. You can see there's no overlapping wave structures here, so it's a clean 1, 2, 3, 4 and 5 down here. So we're looking for an A and a B and a C here. This should be the C wave here should be in 5 waves. Let's drill in there, but we're looking up at the 174.50 where the block of supply is here as such. So in here we'd been looking, got our little 5 waves down from the high here, quite clean and tidy, and we're looking for an A wave, a B wave and a C wave here in 5 waves, and this is the 1 and 2 and 3 and 4. So we're still looking for one more high to come into play here, into this supply here, and then rolling over from that point there. If I got a smaller one here, yeah, we can see it a little bit better here in terms of 1, 2, nice strong 3rd wave, 4th wave, which may get a bit more complicated, but we are looking for a high above here before we see a rolling over from here. So, you know, the 174 is resistance here, would be a trade, or you could use the 174.20, the pivot within group 1, 10, 20 and 30. If the 20 becomes the retested resistance after we've got a high here, then you know that you're on the right track. You can get one small position here, look to get another one under the 174 and then another one under the 173.70 there. The euro yen is also on track as well. Just on the 4-hour chart here, we're looking at this A, B and C here, 61.8 retracement level as a wave 4 of C of 4, and then we're looking at this down through here as wave 1 and wave 2 coming back to the 50 and 60% retracement level, and then rolling over from that point there. So let's just drill into there for a moment. So this is what we're looking at here. Once again, 5 waves down through here, and yeah, and the correctional move back up here. But I must say it doesn't appear very corrective. It looks a bit more sort of bullish here. So once again, if the 138.20 with the pivot within group 1 here becomes the retested resistance, then that would be the short from here. You may be able to do it from the 50 once we've got this high in place here. If we get another high in here, and then this comes down and bounces on here, then comes down here and bounces here, and you can see that that's a resistance through there, well then you could probably glean a position there and then work the 138.20, the pivot here, and then the 138 here. But you know, it does look a bit bullish here, I must say, so just be a little bit careful. I mean, in terms of the trading levels, you'd be on the long side here because you've got support on the 138.30 here. You would have been, well, I would have been long here, looking to add on to the 50, well, taking profit at the 72 here, waiting for the 72 to become support, and then adding on the 72 and going higher. But that's trading with the levels to the upside, which would be, you know, trading a B and C correction to the upside. So it's a bit of, yeah, we'll just see how we go here. The bigger picture is bearish. Let's just see how this runs out of steam here before we make too many decisions on this one here. Alrighty, well, I think that's about it. Yeah, so look, one of the main points here is to see how the US dollar reacts further into at the 80, and see if there's any follow through on the euro and US dollar. And as mentioned, the Feds are going to be cutting the bond buying back in October. The market was expecting it, so there wasn't really a large spike in the market. So everything's pretty stable there.